Hello and good morning, friends. Ethical Advisors is proud to present one of the latest and the most dynamic options of passive income, courtesy ICICI Prudential Life Insurance Company Limited. We are fortunate to have with us today Mr. Himmat Chauhan, who is an investment specialist with iPro, to run us through the salient features and also some of the intricacies of the various options involved in the guaranteed income for tomorrow, or gift as we call it. This is a gift which every individual should take a look at to ensure his family's and his the well-being of his beloved. So without any delay, we hand over to Mr. Himmat Chauhan. Himmat, welcome to the webinar. And if you could share a couple of thoughts on what passive income is and what gift and how gift and its various options can help our viewers.
Yeah, thank you, sir. So this product is specifically been designed looking into the perspective of the client side, and especially at the current scenario. So major reason for coming out of the product which provides regular income, that too into guaranteed space. So if you look at today's scenario where people are suffering from job loss, irregular income, they're also with the falling interest rate scenario from past, if you look from past decade, the interest rate scenario has been always falling down. And as a developing economy, going forward, interest rate scenario will always be on a dovish side. So definitely, if someone who is looking for a passive income where they expect a regular income coming them on a monthly side, so it will be really beneficial for them so that their whole financial planning is not taken for a toss in situation like COVID. So that's the main reason. So the short-term needs as well as the long-term needs of wealth creation, both are being catered from the product of gift, which has been designed by ICICI Prudential, which is guaranteed income for tomorrow. It has very good features in terms of options which we are providing. So if I talk about the first option which we are talking is the income option.
Sorry, so let me just pause you. I think viewers, it is very important, and as Himmat said, passive income is something which you have to create for yourself in an uncertain scenario where job loss has happened and where COVID also threatens the future probability. Also, it increases the future probability of any uncertainty in your business or in your profession or maybe in your job. Passive income is that second income which you generate, which takes care of the future needs. In short, it's one child, an additional adult child, which is earning money for the family. So that's passive income. So I thought I'll just highlight that before Himmat went on to the gift options. Yes, Himmat, please carry on.
Yeah, so in gift option, we have four options. So starting with the first option, which we are looking at, that option is known as the income option. So in income option, it's a very easy to understand product. It has very simple features. So in this, we as a company is giving client an option of 5, 7 or 10. So where an individual can pay for 5 years or for 7 years or for 10 years. And there is a cooling period of just 1 year. So for example, if individual is paying for 5 years, 6th year is the cooling period. Post that, we are giving option to the client where they can take out payout for 5, 7 or 10. So if you look total, there are 9 combinations. So if an individual can pay for 5 years and get income for 10 years. Where if we look on the hindsight, an individual can pay for 10 years and get the income for 5 years. And the good part is that for the while the premium paying term is there, plus the 1 year cooling period, the client is getting 10 times life insurance cover of their annual premium. So let's take an example. If an individual is paying 10 lakh rupees per year, 1 crore of life insurance cover is there for whole 5 year plus 1 year of cooling period, which is the policy term, which is the 6 years. Post that, regular income, tax-free, guaranteed regular income gets started for the client. They can either take it on the yearly basis or they can take it on the monthly basis. And here, irrespective where the life insurance cover is the policy term, let's say something happens to the client while taking the payout. The remaining payout will go to the nominee, that too tax-free and that too guaranteed. So this is the feature. So if I go through an example of one example of gift as an income option. If an individual is paying 10 lakh rupees for 10 years, from the 12th year for next 10 years, an individual will get 19 lakh 30,000 rupees, that too tax free guaranteed. So here it is gift is specially designed where someone is looking for guaranteed income, someone is looking for tax free income, someone who does not want to deal with market volatility, someone who wants to create a passive income asset which will regularly generate income for them for a specific period of time. So it can be looked upon as a retirement solution. It can be looked upon as a child education, where we know that my future liabilities will be coming post 5 years or 10. Feature is that we all know in today's time the flexibility which is being needed. So let's take a scenario, due to some emergency, let's say, or a market situation like COVID, they require lump sum amount of money. So your company is also providing that they can take the lump sum or their future income together when they need in form of lump sum. So here, this is also a feature being provided in terms of flexibility to the client.
Okay.
And this all income, with, yeah.
No, so just, I know this is fantastic. So just to recap, what you're saying is that the subscriber can choose and customize his plan. Firstly, he can choose for a premium pay in term of 5, 7 or 10 years, depending on how confident he is about the future cash flow. He can go for a big amount, of course, get that covered till he's paying the premiums plus 1 year. So life cover of 10 times is available in that period. Once that is over, he gets, if he's choosing a 10-year plan, he gets almost 2 times what he has put in every year for the next 10 years as income. So is that a correct summary?
Yes, definitely.
Oh,
they are getting
excellent.
2 times of what they're paying.
So this is the income option. Would you like to, so this is the benefit example which you gave. And just for the benefit of viewers, if you can see, a subscriber is paying 1 lakh for 10 years. He's covered up to 11 years for 10 times. So he's covered for 10 lakhs. If God forbid something happens. So it's much better than leaving money in a bank deposit or lying in a mutual fund. And then once these 11 years are over, he gets close to 2 lakh rupees tax-free in his hand for 10 years. Like I said, this is just one illustration, but you can choose multiple payback options also. And this is the slide which I guess Himmat summarizes it all. So you can, as a subscriber, you can choose whether you want to go for 5 pay, 7 stay, 10 pay, 5 stay, whatever you want. Excellent.